Hello everyone, very good evening to all of you. So this is Monisha. It's my pleasure to be your moderator for today's webinar. Before we dive deep into today's session, so I wanted to take a moment to highlight an exciting opportunity for all the startups in Mangaluru. The Shine Foundation, in collaboration with KDEM, Government of Karnataka and other incubators across Karnataka, is launching an acceleration cohort for all the startups. So as part of the Karnataka Acceleration Network, so it's called as an KAN. So this is a very good opportunity for all the startups who are in a growth stages and who are in a scaling stage. If you are interested, then you can register. I'll be sending all the details of the event at the end of the session. So this program starts from August 1st. So registration details, etc., all the things I'll share it to you via email and also in a chat box at the end of the session. So now I welcome you all to the Startup CA webinar series. So this is a collaborative effort between the Shine Foundation and the Institute of Chartered Accountants of India. In today's session, we will explore master the maze of startup taxes and GST. So a crucial topic for any emerging business or startup. Understanding GST registration, filings, and tax benefits is essential for maintaining financial clarity and fostering growth. So, by the end of this session, you will be well equipped with the knowledge to manage your startup taxes efficiently. Now, let's welcome our esteemed speaker for today, CA Deepika Pai. Welcome you, Deepika.
Thank you.
If you attended our last session, so you may already be familiar with our speaker, Deepika. So Ms. Deepika is a chartered accountant and an associate partner at BCL India. She brings a wealth of experience in financial analysis, taxation, and corporate financial services, with a proven track record of delivering accurate financial reports and ensuring regulatory compliance. So she excels in budgeting, forecasting, and strategic financial planning also. Deepika's proficiency in accounting software and advanced Excel functions, coupled with her strong analytical skills, make her a valuable asset in the driving business growth and efficiency. I welcome you once again, Deepika.
Thank you, Manisha.
Okay, building a strong startup requires a solid foundation. So in this, CA plays a very vital role in laying that foundation. We are thrilled to have a prominent member. Is Gautam sir there? So yeah. Okay, so today our esteemed chairman from Institute of Chartered Accountants, he has not yet joined that, but in his absence, I'm welcoming him. So I also want to extend a warm welcome to our esteemed partners for this webinar who are instrumental in engaging startups and students. We also extend our gratitude to our ecosystem partners and a warm welcome to all of you, including our audience members and participants who have joined us today. So let us not waste our time, and this floor is yours, Deepika. Let's start the webinar then.
Thank you so much, Manisha, for such a brilliant introduction. Just let me know when the screen is visible.
Yeah. Okay.
Yes. Is it visible now?
No, it's not. Yeah, now it is there. Yeah, it's visible.
All right. All right.
So
a very good evening to everyone. Thank you so much for this opportunity. Thank you for joining in. So without any further ado, let's quickly start with today's session, wherein we will deal about the GST registrations, the filings, startup recognition, as well as the tax benefits associated with the startup. So a very quick outline of what is going to be discussed in today's session. So we will start with, there are three segments in all. The first one is wherein we will discuss about the GST registration and the filings. The second is where the startup recognition and benefits will talk more about it. And lastly, a couple of questions will be answered. Now, talking about the GST registration and filings, we will look into the background, the basics and the registration threshold. Then we will look into what are the benefits you reap in if you register for GST, the various types of registration, wherein it is mandatory, wherein it is optional, Going ahead, we'll also look into what are the documents you will require in hand, what documents you should keep in your hand when you go for a GST registration, and understanding about the GST filings. Secondly, in the second segment, we will discuss more about the Startup India program. What is a startup, the eligibility criteria, what are the different types of entities that can become a startup, what is the startup registration process, and lastly, the benefits, that is both the tax benefits and other benefits that a startup can benefit from. Now, to look into GST, I'm pretty sure everybody knows what GST is. It's nothing but the goods and service tax. What more about it? It is a unified tax system in India, and it applies for the supply of goods and services. Next, it it is a consumption-based destination tax, which has consolidated various indirect taxes which were prevalent before 1st of July 2017. You had n number of taxes like VAT, service tax, CST, excise duty, all that has been clubbed together, consolidated together to form something called as a GST. Now, there are three types of GST that is usually charged. The CGST, which stands for the Central Goods and Service Tax, SGST, which stands for State Goods and Service Tax, IGST, which stands for Integrated Goods and Service Tax. Now, what are the rates that are present? There's 0%, there is 5%, there's 12%, 18%, and the highest rate is 28%. Now, what is the one extremely brilliant feature of GST? Input tax can be offset with output tax, meaning whatever tax that you pay while you purchase can be offset with the tax liability that you have to pay when you sell the goods or services. When has this come into effect? It has come into effect from 1st of July 2017. And it is more or less, there's a term that is usually used, that is one nation, one tax. And it has reduced the cascading effect which was present in the erstwhile system of service tax or VAT. Now, speaking about the threshold limit, what is the threshold limit when it comes to goods? So suppose you are engaged in the business of supplying goods. You are mandatorily required to get the registration, provided the aggregate turnover of yours from selling the goods has crossed 40 lakhs in a financial year. Let's say if you are engaged in supply of services, in that case, the limit is a little less. That is, the threshold limit is INR 20 lakhs. The moment you cross this limit of 20 lakhs, you will be required to go for registration, that is mandatory registration of GST. Now I'll throw a question to you. Suppose you are engaged both in supply of goods and services. So you're not just engaged in goods, not just engaged in services, you do both. In that case, what will be the threshold limit applicable to you? You can put it in the chat box. Quickly. Okay, some of you are right. The threshold limit that is applicable if you're engaged both in services and goods is not 40 lakhs, but it is 20 lakhs. Now, what are the benefits associated with the registration? The moment you register, there are a lot of benefits that you derive from it. Now, what are those? First is legal recognition. Now, what do you mean by legal recognition? The moment you are GST registered, you are legitimate in the eyes of law. You have a legal entity. There is seamless input tax credit. Now, what is meant by seamless input tax credit? It is only when you register under GST, you will be able to have the benefit of offsetting the input tax credit against the output tax liability of yours. This benefit is not available if you're not registered under GST. Now, there is wider market reach. The moment you register again, you will be able to sell the goods across the borders. So that means your goods and services will have a better, wider market. Competitive advantage. Usually people refer, so even if it was me or you will always prefer to go and buy suppose you're running a business, you will definitely go and prefer to buy from a registered GST supplier, because you can claim the credit, right? So you can claim the ITC. That is why your business will also have a competitive advantage. Business recognition. Most of us, as I said, prefer to deal with the GST registered person. So that is again beneficial. Access to e-commerce platform. You have Amazon, you have Flipkart, you have various platforms like Swiggy. Again, all this wants to make sure that they deal with the GST registered person. So you will be able to openly participate in the online marketplace. It also helps you in facilitating exports by way of providing you with the GST refunds. There's 100% compliance with law. And again, when it comes to government contracts, you'll be able to grab more of tenders and government contracts if you are registered under GST, because governments prefer to deal with the registered persons. It's one of the criteria. If you are only GST registered, you can apply for the tenders and contracts. Moreover, it is a very simplified structure when you compare to what was there prior to 1st of July 2017. So this is regarding a brief into what is GST, the threshold, the benefits of registrations. So going ahead, just a moment. Now, next, let's discuss about the types of registrations that you have under GST. Now, very importantly, there are three types I can segregate. That is, one, you're previously registered under VAT or service tax or under CST, or you have to get a mandatory registration as per the GST law, or you want to go for an optional one, that is voluntarily you want to register. Now talking about so I can segment wise this into three parts, that is previous registration, normal registration when you cross the threshold, and lastly voluntary registration. Now, when it comes to previous registration, as I mentioned, if you were already registered under service tax, if you are already registered under VAT or the erstwhile tax systems, it is compulsory for you to register under GST. Next is talking about the normal taxpayer, that is voluntary or when the threshold is crossed. Voluntary is you want to take the input tax credit. You want to enjoy the benefits that is provided under the GST law in terms of legal recognition, business recognition, facilitating exports, and all the benefits that we just discussed. In that case, even if your threshold is not crossed, you can go for an optional registration or voluntary registration. The government, the department, GST department will not say a no to you. The other one is where you have to mandatorily register the moment you cross the thresholds, the 40 lakhs or 20 lakhs threshold. And lastly, you will have another section wherein you have whatsoever your turnover is, you have to go for a registration. If you are a casual taxable person, if you are an input service distributor, if you are a non-resident taxable person, non-resident online service distributor, if you are liable to pay RCM, that is you're liable to pay tax under reverse charge mechanism, and the other things that I have mentioned over the slide. Suppose you are a person who have to deduct the TDS, collect the TCS. In all these cases, it is compulsory required for you to register for GST. I hope this is very much clear. So moving on to the next segment, that is regarding documents required for registration. So in case if your startup is not yet registered, what are the things that you have to keep in mind? What are the things that you have to keep ready before you apply for registration? And the registration is online. It is on the portal, GST portal, www.gst.government.in. gov.in. So if you go there, you can register your business. And what are the documents that you require? First of all, proof of business registration. If you're a sole proprietorship, you will require a PAN card and Aadhaar card of the proprietor. If you're a partnership firm, you would require a partnership deed. If you're a company, then it requires a certificate of incorporation and MOA. So these are the requirements which will act as a proof of your business registration. Next, you will have to have identity and address proof of all the promoters and the partners. So PAN card and Aadhaar card of the promoters or the partners or the proprietor becomes important. Mobile number is again important. The mobile number should be linked to Aadhaar sometimes. Email ID of all promoters which is in use. That is again very important. Passport size of photograph is also required to be uploaded. So these are requirements when it comes to the promoters or partners. Next is business address proof. So usually it is a rent agreement or the lease agreement. They will also ask for, once you provide this, the usual query from the department will be for the electricity certificate, the bill, the water bill, property tax receipt, and they will also ask for non-objection certificate from the owner of the premises. So that is regarding the documents required. There's still more to add on. Now, bank account details have to be submitted. That is either the first page of the passbook or a cancelled check should also be uploaded along with the application. The next is authorization form. So whoever acts as the authorized signatory for the business, the promoter or the director has to submit a authorization form for that effect. Now, additional documents that might be asked based on the nature of entity, that is, if it is partnership firm, a partnership deed will be asked. In case of company, the board resolution for the authorized signatory. So if you assign some person as an authorized signatory, for that effect, you will have a board resolution passed, isn't it? So that will also be asked. In the case of LLP, usually the copy of LLP agreement will be asked. Now, further, whoever is the person who is authorized as an authorized signatory, you will have to include his PAN card, Aadhaar card, mobile number, and email ID along with the address. So this also will be a supporting document that is required while you register under GST. Now, it is made compulsory for Aadhaar authentication. So Aadhaar authentication has been mandatory. That is, it is a last step while you file your application. And so make sure that the mobile number that you provide is linked to the Aadhaar. Now, what is the timeline for the approval? Usually it was 3 days. Now it has been made 7 days. So 7 days from the date of application, you would receive the GST certificate. Suppose there is a query in between by the department, they will revert you within these 7 days. You will, once you reply, again, they will take an extension of 7 days, and within that period, they will approve or reject the application. Now, I just want you to go through this link wherein a detailed registration procedure along with the manuals and facts has been provided. Just give me a minute. So I'll take you to the page wherein we have the detailed registration formalities given. So how to apply for registration. So if you click here, this is on the GST portal itself. So if you're applying for registration, normal, taxpayer, composition, casual, so all the types have been mentioned. Let me just check for the normal taxpayer, what is the procedure? So you have a user manual here. So this details out every single aspect of the registration formality. So you have each and every detail present here. So starting is the first tab that appears as soon as you go to the portal. 1 second. Yes. So here it is. So new registration, how do you go ahead? What are the each and individual step has been mentioned here. So once you apply for new registration, you'll be required to fill in all these details as to who you are, what is the state, district, legal name of the business, PAN number, email address, mobile number, all of it. So once you proceed here, you will be provided with if you already have any registration, that will be displayed. But if you do not have any, then it goes to the next step wherein you'll have to provide the OTP, both which is received on your mobile as well as the email. And once you proceed here, you will get the TRN, that is temporary reference number. Once you get the temporary reference number, with this reference number, you will be required to complete the application. So every details have been mentioned here. So you can quickly go through this whenever you have some time. It is in detail, like there's no aspect that has been left out from this registration formality. So going back to my presentation. So 1 second. Yeah, all right. So the link has been provided. Please do have a look at that. Next comes the types of GST returns, filing deadlines, and consequences of the non-compliances. Now you have around 22 returns to be filed. Pretty sure not all these 22 will apply to the business. I can talk about few important ones, that is GSTR 1, there is GSTR 3B, there is GSTR 9, and there's GSTR 9C, which usually applies to every business. But suppose you are an input service distributor, then GSTR 9 applies to you. If you are a person who has to deduct the TDS, GSTR 7 applies. If you are an e-commerce operator, GSTR 8 applies. So apart from 1 and 3B, it is only when you are a certain type of a taxpayer, then 6, 7, 8 will apply to you. Otherwise, normally speaking, you have to keep in mind only GSTR 1, 3B and the annual return, which is in the form of GSTR 9 and 9C. Now, what is GSTR 1 and what is GSTR 3B? Very important forms. Now, GSTR 1 is where you give the details of all the sales that you have made. So, all the invoices that you have raised, all the output supplies that you have made, you give a summary of this. It is more of a reporting nature, and you do not pay any taxes here when you file this return. So, it is a return used to report outward supplies of goods and services, or both made by a registered taxpayer, to be filed by any normal taxpayer. Now, what are the due dates to file this? Suppose you are a business with a turnover above 5 crore, or you are a person who has not opted, your turnover is below 5 crore, but you have not opted for QRMP scheme, then 11th of every month, you will have to file this return. Now, what is QRMP scheme is quarterly return, monthly payment. Whom who is eligible for this scheme? It is optional again. You may go for it, you may not go for it. It is left to you. QRMP scheme is available for those persons who have a turnover below 5 crore. And when I talk about turnover, it is the aggregate turnover of the financial year. So if you are a person who has opted for QRMP scheme, that is you file the returns quarterly, you give the details of output supplies quarterly, but you make monthly payment, then the due date is 13th of every quarter. Okay, 13th of every quarter. For example, it is April, May, June. You will have to file the QRMP return, that is the GSTR 1, within 13th of July. I hope this is very clear to you. Now, what is GSTR 3B? It is a summary return of outward supplies. It is everything. It's a consolidated point where you give the details about your sales, about your purchases, about your output tax liability, about your input tax credit. And also you make sure that you pay off any output liability minus input tax credit. If you have any balance figure, that is your liability, you pay it off through a challan. So that is nothing but GSTR 3B. And what is the due date? Monthly, that is it has to be filed monthly. If you are going for not a QRMP scheme, then 20th of the next month you will have to file it. If you are opted for QRMP scheme, then 22nd or 24th, again depends on the states where you are located. So few states have 22nd of the succeeding month of the quarter as the due date, and few have 24th of the month succeeding the quarter. Now, CMP 08 is when you choose a composition scheme. Now, what is composition scheme? It is a scheme which is for the certain taxpayers who have the turnover below 1.5 crore. And not everybody is covered under composition scheme. If you are a dealer, if you are a restaurant service provider, or if you are a manufacturer of certain goods, then you can apply for CMP scheme. I mean, that's composition scheme, provided your turnover does not exceed 1.5 crore. And what about the service provider? Yes, you are eligible, but the limit is little less here. It is up to 50 lakhs. So suppose your aggregate turnover is up to 50 lakhs, then you can apply for composition scheme. In composition scheme, the rates vary. There's a significant lesser rate of GST that you collect. You will not be eligible for input tax credit. Also, you will have to file the returns on a quarterly basis. Now, what is the due date here? On or before 18th day of the succeeding month of quarter end. So first one will fall on 18th of April. That is Jan, Feb, March. Whatever sales that you have made, you will have to pay the liability with it. Pay the liability as well as file the returns within 18th of April. Next 3 months, that is April, May, June, 18th July will be the due date. Next 3 months again, 18th October, and subsequently it is 18th of January. Next is GSTR 6. This is to be filed by input service distributor for distribution of ITC. So in case if you are registered as an input service distributor, then 13th day of the succeeding month, becomes the due date. For GSTR 7, that which is applicable for the persons who are responsible to deduct the TDS, 10th day of the succeeding month becomes the due date. For GSTR 8 is for those who are e-commerce operators. For them, it is the 10th day of the succeeding month. GSTR 9 and 9C, which are very significant, and this is applicable to all. So it is the annual return. Both are annual return. One is the wherein you give the information. The second one is the reconciliation. So for both, the due date is 31st of December of the next financial year. So let's say we are talking about 24-25 financial year. What will be the due date to file GSTR 9? It will be 31st December 2026. I hope this is, it will be 31st December 2025. Sorry. I hope this is clear to all. Now, when is GSTR 9 is applicable to all? GSTR 9 is applicable only if your turnover is more than 5 crore. I've also mentioned the penal consequences. Suppose you do not file the returns within the deadlines which have been prescribed. In that case, what are the penalties? That has also been mentioned clearly. Now, when it comes to GSTR 1, GSTR 3B and 9, it depends on your turnover that how much penalty you will be charged with. So that has been provided here. So suppose there is delay in GSTR 1 and GSTR 3B, and you are a person who is not making any outward supplies, then you will be charged 20 rupees per day. That is, the breakup is 10 towards CGST, 10 towards SGST, or maximum of rupees 500. So now 500, again, the breakup is 250 each is CGST and SGST. But suppose you're making some sales and your turnover is below 1.5 crore, then the liability, that is the penal charges, the late filing fee will be rupees 50 per day. Again, the breakup is 25 each towards CGST and SGST. Maximum that can be charged is only 2,000. And so the next one is where your turnover is more than 1.5 but less than 5 crore. You will be charged 50 again per day penalty, but maximum that they can charge is 5,000. And lastly, if your turnover exceeds 5 crore, again, the per day limit is the same, 50 per day, or maximum is for 10,000 they can charge you. Same goes with the delayed filing of annual return. If you are a person who is, again, here the slabs are 5 crores up to 20 crores and more than 20 crores. Per day fee remains the same, 50 per day if your turnover is less than 5 crore, 100 rupees per day if your turnover is between 5 and 20, and it is 200 per day if your turnover crosses more than 20 lakh. And the maximum is as a percentage of the turnover, 0.04, 0.04 again, or 0.50 when it crosses 20 crore. So I hope you're very clear with the consequences of, not filing the returns. And now people have asked, some of them have asked about how to file a nil return, how to file a GSTR 1, how to file a GSTR 3B. So again, there's detailed steps here. There's a manual which has been created by the department wherein they have provided you in detail each and every single step of how you have to file the returns. So let me go to the first one, that is preparing and filing form GSTR 1. So if you just click on the user manual here, you will get the detailed steps. So where you have to go once you log in to the portal, services, returns, return dashboard. Here you have to go to the return dashboard again, fill the financial year for which you're filing, which is the quarter, mention the month. I'm sorry. Then this is GSTR 1, right? So it is nothing but details of outward supplies of goods or services that you have to provide. Usually people prefer to prepare it online. Until and unless you have many invoices, it is best to go for a preparation of online means. And then you provide all the details. Okay, all the details that is mentioned here. Again, what is 4A, 4B, 6B, 6C? You have detailed explanation of all these points when you go and look into the manual. Since I have a restriction on the time, I will not be able to cover everything in detail, but I've given you ways where you can find detail about how to file a return. Just give me a minute. Now, talking about something which interests you a lot, and that is regarding startups, right? So now, what is startup? How did it come into picture? From where did we get this word startup? All these questions will be running. So it all started with the Startup India program, which was announced by the government of India in 2015. uh, as you all know, startup ecosystem is ever evolving. There is change every now and then. There are new terminologies coming into the picture. But why did it all start? So it why did Indian government even propose this Startup India program? So that is to build a strong ecosystem to nurture innovations. We have been depending on the foreign countries for a lot of inputs, lot of technologies, which are actually obsolete. Right, when it comes to India, it becomes obsolete, and there's no much use. Because of that reason, we wanted to have more innovations in the country, drive the sustainable economic growth, and also to create a large scale of employment as well as wealth. The Startup India program was started. It followed with the Startup India Action Plan, which was laid in February 2016. And what are the benefits that a startup gets? It is not just the central government benefits. It is also several state also have a lot of incentives for the startups. Now, to go further and discuss what is a startup. Can every business be called a startup? No. Who has given the definition of the startup? It is the Department for Promotion of Industry and Internal Trade. In short, we call it as DPIIT, that has defined the term startup entity. Usually you have to you to be eligible as to for any business to be eligible as a startup, it has to fulfill certain criteria. It has to be fulfilling certain conditions, and these conditions revolve around turnover, business objective, and the time period since its inception or incorporation. And just being just putting a tick mark against all these eligibility criteria, does that make the business a startup? No. You have to apply for it. And where should you apply? It is at www.startupindiagovernment.in. I hope this much is clear about the startup. Now let us look into the eligibility criteria in detail. So it circles around period, entity form, turnover, activity criteria, and what it should not do. So the first four that you see before you, that is regarding period, entity form, turnover, activity criteria, is a plus. It's an addition. And the last one is to negate what you should not do to be eligible as a startup. Now, talking about the period, up to a period of 10 years from the date of incorporation or registration. So if you want to become a startup, if your business wants to become a startup, it should have started within a framework of 10 years. 10 years should not have exceeded while you are applying for the startup. While you're applying for the startup. Next is entity form. You can either be a partnership firm, again, registered partnership firm. You cannot have a partnership which is unregistered being eligible as a startup. Secondly, private limited company. No to a public limited company. Public limited company cannot be called as a startup. Again, LLP can also be eligible as a startup. Turnover, your turnover from inception in the last 10 years of your operation, since you have started, it should not exceed 100 crore. And most importantly, the activity criteria. So I cannot say I can just start a trading business, and I cannot say that I'm a startup because I just started yesterday, or my turnover has not crossed 100 crore, or I'm a partnership firm which is registered, or a private limited company, or a LLP. What is important is the activity, what I'm doing. What should be my activity? It should be something innovative. Okay, there should be some development, there should be some improvement in the product, process, or service. Or they should have, whatever model I'm doing, whatever is my business, it should have a scale to generate wealth or generate employment in a large scale. So only then my business will be eligible to become a startup. And what it should not do is it should not be formed by splitting up or reorganization of the existing business. So these four points plus the minus 1 point is very important for you to understand if your business can be eligible as a startup and can it apply or not with DPIIT. Now, regarding entity registration process, I'm pretty sure you are all well versed with the different types of entity, but I want to focus more on these three because only these three can be eligible as a startup, right? So first is partnership firm, which is again in a registered form, a private limited company or a limited liability partnership. Now, what is partnership firm? Very quick glimpse because I'm pretty sure you all are aware of these forms of organization. Now, what is partnership deed? It is an agreement between two or more persons who intend to become a partner to start a business. Now, partnership deed, it has to be executed on a stamp paper. Again, what will be the stamp duty value depends on the state where you want to register the same. Now, what will comprise in a partnership deed? You have two types of details. One is general details, which should be there. Specific details, which need not be there. It is optional for any entity to have the specific details or not. Now, what are general details? The name and address of the firm, the partners, nature of business, the capital each of the partner contribute, and most importantly, the profit sharing ratio. Now, what are specific details which may be there, may not be there in the partnership deed? It is relating to interest on capital, drawings or loan, salaries or commission if you want to pay to the partners, the rights, duties, and obligations, and what are the adjustments to be made at the time of death or retirement of a partner or in the case of dissolution. Now, is registration of partnership compulsory in India? No, it is not compulsory. It is optional. But to be eligible as a startup, you need to register the partnership firm. And how do you register? Where do you register? You register with the registrar of firms by paying certain fees, prescribed fee of the registrar of firms. Next comes private limited company. Now, the incorporation process of private limited company takes around 2 to 4 weeks. It is very much regulated. That is why the cost of compliance is a little high. And you need minimum two shareholders and two directors, out of which one director has to be a resident Indian director. What is the liability here? It is limited liability. And how many shareholders can you have? Maximum shareholders that you can have is only 200 members. And further, what are the constitutions? What are the bylaws? It is nothing but the memorandum of association and articles of association. Going next is limited liability partnership. What is limited liability partnership? It has features of both partnership firm and private limited company. What is the cap on number of partners that can be there in LLP? It is unlimited. Now, but all the partners should have two things. One is the DSC, that is digital signature, and also they should have director identification number. Whereas liability LLP registered, it is not registered with the registrar of firms. Instead, it will be governed by the MCA. It is registered with registrar of companies. So these are important things that you have to keep in mind. Also, if the turnover crosses rupees INR 40 lakhs, or if the capital contribution goes beyond 25 lakhs, then the statutory audit becomes necessary. Also, every year you have to do certain filings with the registrar of companies, that is in relation to the annual turnover. The annual return has to be submitted, and statement of affairs, nothing but the P&L and balance sheet report also has to be submitted. So that's regarding the entity registration process. This is not relating to the startup, but this is relating to the partnership firm, private limited company, and the limited liability partnership. Now, what are the other tax and regulatory registration that becomes applicable to a startup? You should have a PAN, you should have a TAN, you should obviously we have discussed about goods and service tax when you have to take the registration, but it is highly recommended for any startup to go for a GST registration. Again, SND, that is shop and establishment, is a very important registration which every establishment should have. IEC, suppose you are engaged in import and export of goods or services, you would require import and export code. Udyam registration, which is optional. Startup registration, that's what we are speaking about, to reap in benefits. and provident fund, employee state insurance, professional tax, trademarks, and copyright. These are several registrations that you have to take care of. Now we'll talk about another interesting topic, that is startup registration process. Again, a couple of you have asked this question. Can you let us know how startup has to be registered? What is the process? First of all, there are two types of registration, or I can say two steps in registration. One is the step one registration, which you have to do with DPIIT, which enables you to get a certificate called as certificate of recognition. Okay. The second one is step two registration, that is with IMB, that is Inter-Ministerial Board, which comes under Ministry of Commerce, and they provide you with something called a certificate of eligible business. Now, what is the difference between these two certificates is that with certificate of recognition, you will be eligible for state government benefits, central government benefits, loans, or to be called as a startup, you should have this certificate. The second step registration enables you to get the 3 years tax holiday that we usually talk about in income tax. So I hope these 2 points are clear. The certificate of recognition, to be eligible as a startup, to get any benefits from the state government or central government, you should have the certificate that's called a certificate of recognition, and this comes from DPIIT. What is the second one? Suppose you want a tax holiday benefit of 3 years out of the first 10 years of incorporation. In that case, you have to apply for this, and this is called as this is applied with interministerial board, and it is called as certificate of eligible business. Now, what are the steps for each of the certificate has been mentioned below. I'll quickly go through these points. So where do you apply? Both the certificates is applied at the same place, that is www.startupindia.government.in. Now, what are the information required? More or less information remains the same, but certain additional information is required when you go for IMB certification. Now, what are the information required? First of all, first thing that comes is, what stage of project are you in? Are you at the ideation stage? Are you at the validation stage? Have you got a couple of customers, that is early traction, or you have already got a market and you want to expand it further? So these are the 4 stages. Even when you go on Startup India government.in platform, you will see this 4 points there. That is ideation. What is your stage? So ideation, validation, early traction, or scaling. So this is one information that is required. Second comes industry or service sector the project pertains to. So what is your process? What is your product? What is your service dealing about? Which industry it belongs to? There's a drop down list. You have to select from that drop down. Third thing is, they'll ask you how many employees have you hired currently? What is the employee head count? Fourth, you are required to write 250 words, up to 250 words on each of this segment. One is brief of project, what your business is doing. What is the problem the product is serving to? What are you aiming to solve? Third, how the product is solving the problem. Uniqueness of the product, how different it is from the existing product, how the startup will generate the revenue, and if you have already received any award, recognition, grant, etc., you have to give the details along with the proof. Nextly, I'm sorry, sources of the current finance. So whether you are self-financed, that is bootstrapped, or whether you are funded, so that details has to be provided. Details of partners, directors, profile, and role of each team member has to go. Then you have to also provide website, videos, pitch desk if you have any. And lastly, copy of incorporation certificate or registration certificate has to be provided. So these are the requirements if you have to apply for a certificate of recognition with DPIIT, which enables you to be called as a startup. Without this registration, you will simply be a business. So only when you receive this certificate, you will be eligible as a startup. And with this, what benefit you get? You get every benefit except for the tax holiday. You want to go for the tax holiday, go to the next step, that is step 2 registration, which is with Interministerial Board, or it is also called as IMB. I'm sorry. Now, certificate of eligible business. So that is certificate of recognition, DPIIT. What is certificate of eligible business? IMB. Application, again, it has to be filed on the same platform. Now, what are the critical points to keep in mind? Here, see, there you did not have all these conditions. Only entities incorporated as companies or LLP are eligible for tax benefits, which means that partnership firm registered can apply for certificate of recognition, but it cannot apply for certificate of eligible business. Only LLP and private limited companies are eligible for tax benefits and can apply for eligible business certification. Incorporated post 1st April. Did you have that condition in certificate of recognition? No, this condition is present only in for certificate of eligible business. Now, what should be the period? You should have incorporated after 1st April 2016, but before 31st March 2025. But let me tell you, this 31st March 2025 gets extended every year. It becomes, for the next year, it becomes 31st March 2026. Likewise. Next, as per the current standard of procedures, the process may take, so once you apply, TPIIT is very easy, you get it very quickly, but when it comes to eligible business certification, it might take around 4 to 6 months for them to give you this certificate. Very importantly, what are the information required? In addition to what you have provided to DPIIT, you will also be required to give them MOA or LLP deed, which contains the details of business activities, last 3 years financial statements. But suppose you have just incorporated yesterday, then you have to give them provisional for 1 year, and also the ITR for the last 3 years, a pitch desk as to what your business is doing, who are the directors, who are the promoters, who are the partners, what is your vision, what is your mission, all that goes into the pitch desk. You will also have to give them a video covering briefly about your business, what it does, how it performs, what is your market, more or less an advertisement to be provided. Now, again, the next few details are in common with what we have under DPIIT, wherein sources of current finance you have to declare. You have to give the details of partners, directors, website, video, pitch desk, and copy of incorporation certificate or registration certificate. So these are mandatory documents which you have to provide to get a certificate of eligible business. Now, make sure that your project should be, again, these are same points that I've covered. It should either be innovative ideas, or it should be such business because of which there is a large scale employment generation or large scale wealth generation. Also, make sure that you tell why your project is unique or why your product is unique and how it is creating wealth and employment. So that was regarding the certificate of eligible business. Now, as I said earlier, there are 2 types of benefits. One is tax benefits and other benefits. Now, we will talk about the other benefits first and then move on to the tax benefits. Now, what are the other benefits? Self-certification for compliance with labor and environmental law. So altogether, you will be exempted, or you can self-certify when it comes to 6 labor laws, which includes the gratuity, PF, ESI, and 3 environmental laws like pollution control law, etc. Now, what is the benefit? You will not be disturbed by the inspectors or anyone. You will not be demanded for any kind of compliance with respect to the books, registers, etc. And there'll be no inspection for 5 years period. Provide unless and until there is some major discrepancy, they will not inspect your premises. Also, you will have fast track processing and rebate in patent filing. So you will be given a facilitator who will help you with the filing up to the date till you get a patent. So at the cost of government. Also, you on the patent filing fee, you will get a rebate of up to 80%. Suppose you are eligible startup. Now, these benefit is for both kind of startup. That is, you might have eligible eligible business certificate or certificate of recognition. These benefits are there with you. The only benefit that is not available to a partnership firm registered under as a startup is the tax holiday. Okay, so that is only additional benefit that you get if you are also having a eligible business certificate. Now, relaxation in public procurement tenders. Now, what does this mean? So whenever you go for public procurement tenders, you might have seen prior experience, or you have to have a prior turnover of so and so limit, prior experience of 5 to 6 years, or you will be required to deposit certain money like as a security, right? So this element has been exempted for startups. So that's a relaxation that is provided for any kind of startups which have the certificate which is issued by DPIIT. Easy access to funds. So there is credit guarantee schemes, seed fund scheme, fund of fund scheme, which is recently introduced. These are all funds to cater to the finance needs of the startup. Easy exit. Now, in case if you want to close down, in that case, the liquidation processes can be completed within 90 days, which is otherwise 180 days for any other company. And as I mentioned, it is not just the central government benefits, but also state government benefits in terms of land allotment, rebate in stamp duty, free incubation, reimbursement of patent registration cost, reimbursement of event participation fee, performance related grants. So these are several incentives which the state government provide. Again, there is no parity. Some state government provide more, some provide less. And incentives by Karnataka state government. This is a wrong website. I'm sorry. You will have to look into it. Missionstartupkarnataka.org if you want to look at what incentives this Karnataka state government provides. Now, talking about startup tax benefits. Again, as I mentioned, this is eligible to those startups who have applied for a certificate from Interministerial Board. The conditions remain the same. They cannot be a partnership firm, registered or unregistered. Unregistered is, however, out of the ambit, but it is only company or LLP that can apply for 100% tax holiday. It should have been incorporated after 1st April, but before 31st March. This date keeps extending every year. That is, the end date keeps extending. What should be the turnover? It should be less than 100 crore to be eligible for 100% tax holiday. What should be the eligible business? Same, innovative. There should be innovation, development, improvement of the existing, of the product, process, or the goods or the services. It should have the ability to generate wealth or employment, and it should have, most importantly, certification from IMB. Now, what are the benefits that you get is 100% tax deduction against profit under Section 80 IAC of Income Tax Act, which is allowed for 3 consecutive years. That is, within a period of block of 10 years or from the date of incorporation, any 3 consecutive years, you can claim a 100% tax holiday. You need not pay a rupee of tax. So there is an example given here. If a company is incorporated in August 2022, then it can choose to claim 100% tax rebate in any consecutive 3 years till the financial year 2031-32. Now, very important. Suppose I claim, in the same example, I claim for 24-25 a tax holiday. It means for the next 2 years also I have to claim a tax holiday. It is the word consecutive becomes very important. So once the 100% rebate is claimed, I have to claim it for the next 2 periods also. I hope this is understood. And lastly, you should not use assets that were previously used in another business, but you have a relaxation here. Up to 20% of the total value of the plant and machinery you can use. It can be which is used, or if it is imports, if it was never used in India, then it can be used in the business. So that is regarding 100% tax holiday. Next comes, this is a second tax benefit which is available. Remember, this 100% tax holiday is available only to LLP or company which has obtained certificate from IMB. However, eased condition for angel taxation applies to all. All in the sense, even if you have a DPIIT certificate, you are eligible for the angel taxation relaxation. Now let's discuss this further. To understand angel taxation exemption, first you have to understand what is angel taxation, right? What is angel tax? So there is a section under income tax, which is section 56 clause 2 7b, which talks about the income that is taxable under the head income from other sources. Now, what is that income? Let's discuss. So when usually a company issues a shares to any investor or to any person, it has to issue that share at the fair market value, which is known to all of you. But suppose it issues at a premium, a more value exceeding the fair market value, then The difference between the issue price and the fair market value will be subject to tax under this section, which is 56 clause 2 7b. I'll give you an example. Let's say the par value of the share that you are issuing is rupees 10. Fair market value, through a merchant banker, you have done the discounted flow analysis, you got the fair market value, and that fair market value is rupees 80. Okay, so ideally you have to issue that at 80 rupees, which is at the fair market value. Instead, you issue it at 100 rupees. In that case, you have issued a share more than the fair market value, and that surplus amount, that is 100 minus 80, becomes taxable under Income Tax Act under section 56 clause 2 clause 7b as income from other sources to the company. Right? The 20 rupees is taxable. This is called angel tax. This relaxation, that is, the exemption is in relation to this angel tax. Suppose you are registered, you have obtained certificate from DPIIT that you are an eligible startup. In that case, this 20 rupees will not be taxable in the hands of your company. So I hope this is clear. So that is nothing but angel tax relaxation. Now, to obtain this, you have certain conditions to be complied with. One, you should submit to the DPIIT a signed form called as Form 2 that you want to apply for angel taxation relaxation. Point number 2, your aggregate value of paid up share capital and share premium after the issue of such shares should not exceed 25 crore. But to calculate this 25 crore, you do not take into consideration whatever is the share capital or premium that is issued to a non-resident or venture capitalist fund or a specified company. You don't take into consideration whatever is issued to them. Thirdly, the turnover remains below 100 crore up to the date, from the year of inception up to the date you are making that investment. And lastly, you should not invest whatever amount that you receive, you should not invest up to 7 years in the following assets. That is immovable property, loans and advances, capital contribution, shares and securities, motor vehicles, aircraft and jewelry, art, drawings, paintings, etc. You should not invest it in for the next 7 years. So these are the condition. Also, there's one more condition regarding who should be an angel investor. The angel investor's income should not have exceeded 25 lakh, okay, or his net worth should not be more than 2 crore for the last 3 fiscal years. This is also one of the conditions to be complied with if you require an angel taxation exemption. I hope this is clear. So I can talk about two major tax benefits. That is, one is 100% tax holiday, which is eligible only if you have a IMB certificate, and eased condition for angel taxation, which is eligible even if you just have obtained a certificate from DPIIT. So that's all with what I had to discuss. There were a couple of questions that we have received. One is, please show us how to do nil GST filing by SMS or via online GST portal. I've already given the link here as to how you have to file the various types of returns. GST 1 might be, 3B might be. So all those details have been mentioned in that link. How do I give ESOPs technical documentation for this and investors? This can be covered under a separate topic on ESOPs, a very interesting topic again for a startup. So we will take up this in a separate segment. Tax benefits and other financial benefits for startup, which I've already explained. Also, GST waiver for pre-revenue startup. There is no waiver as such when it comes to GST. There's no GST related waiver. You have certain exemption, again depends. You have the small threshold limit, that is the composition scheme. If you are eligible, you can opt for it, but there is no specific waiver as such. There's no waiver regarding the return filing also, except that you have an option to file it quarterly. GST applicable on solo consultants, yes. If threshold is crossed, that is INR 20 lakhs is crossed, then you will have to register yourself even if you are a consultant. How do I deal with cash payment request and no GST bills? Ideally, I would say don't go for such vendors. that is the best way to avoid, because even if you are making a cash payment, then you will be ineligible to claim that as a deduction when it comes to income tax, right? So if your cash payment exceeds 10 rupees 10,000, then you will not be eligible to take the deduction for the same. I want to understand about TPA, NAPS, and GST implication for non-profit. We can take this up in separately. And as a non-profit startup, how will this benefit? Next is GST exemption. I will provide you with the list. So usually it is finance, medical, health, agro-based. These are the few segments where you have GST exemption. We'll provide you with a detailed list. Details on startup registration process. I've already explained this through the two. That is, one is you have DPIIT, the normal registration, and step two, that is with the IMB.
And we have a few questions in the chat box.
Yes, I'll check that. Yeah.
Yeah. All the audience, you can just drop your questions in the chat box, or you can unmute yourself and ask the question.
Please give me a moment. I'm going through the questions. Let me take a water break if you guys don't mind. Just give me a minute.
Yeah, Deepika, sure, sure. They'll be sending their question, so I can read you out later.
Sure.
It will take
Thank
5
you.
minutes.
Yeah. Thank you.
So in the meanwhile, guys, for the startups, so this acceleration program is a very good opportunity. So I've shared the registration details in the chat box. You can open that link and you can go through the program details. I'll be sharing the brochure of the event and all other details about the event through email, which you have provided while registering. So if you are interested, and you can also share it with the network of startups in your network, or your friends and circle who has a startup which can be eligible for this program. So you may share with them for registering.
Monisha, I'm just going through the questions.
Yeah.
So I think first question is to you. Can other state startup apply for this program? So that is regarding the Karnataka Acceleration Cohort Program. You may answer this.
Yeah, so in this regard, any one of the team member from your team has to be part of Karnataka or based out from Karnataka. So then only it's eligibility. I'm sharing the eligibility criteria right away in the chat box. You can go through that, or if you have any other doubts regarding the program, you can just put it. So yeah, Rebecca, you can go ahead with the question.
Okay. Next question is, what is the terms for grants or seed funds? So this depends again from state to state and what grant you are applying to. So a few are performance based grants, few are based on what stage of project you are in, few are refundable, few are not refundable. So this is again state wise. So you will have to check with the respective state portal for this, Sheetal. Next question is from Mavron. Can we use amount from GST to pay reverse charges? Reverse charges has to be paid through, through cash. That is matlab, you can pay it through your credit card, debit card, but you cannot use the existing ITC to pay the reverse charges. However, you can take the ITC of whatever reverse charges you have paid. I hope this is clear. You cannot use the ITC balance to pay the reverse charges. But whatever RCM you pay, that is nothing but the output tax liability. You can claim the ITC credit from it, which you can offset against the output tax, which is not RCM again. Can I apply from Maharashtra for the program? I think Monisha has answered this. How to claim the startup registration charges against state to state, it depends. Next question is a little bit not clear. Now we are starting to sell our new product. House to go about the billing and GST? I'm a little not sure about this question. Next question is there any deadline for applying for eligible business certificate from the date of incorporation? You should not have completed 10 years of period, because that time you will not be eligible as a startup at all. So suppose you have started your business in 2000, let's say 2000, obviously the time limit is after 1st of April 2016, you should have incorporated. Let's say you have incorporated in 2016, then you can apply till 2026. The moment you cross 26, your 10 years, previous 10 years is gone and you're not eligible to be a startup at all, right? So you don't, first of all, be eligible on the terms of the 4 eligibility criteria that comes to that is regarding period, turnover, activity criteria. So you fail there if you cross 2026. So that is the deadline. Okay. Any way to get any concession from RCM? Unfortunately, no. Unfortunately, no. So if it is covered under RCM, so there are separate guidelines as to what is covered. For example, your legal fees, your rent-a-cab service, certain services from the government. Then there's a prescribed list where an RCM applies. And if any of your service or goods that you obtain is coming under the RCM basis, in that case, you cannot go for any concession. Also, you'll be required to register yourself under GST and pay the RCM. On which items GST can't be claimed? There is a concept called blocked credit under section 17 clause 5, wherein you will be ineligible to claim credit. Usually the food items that you purchase, the gifts that you purchase, health insurance, life insurance, rent-a-cab, all this falls under the blocked credit, wherein motor vehicles again, all this will fall under the block credit and you will not be able to claim the GST there. You can ask for the whatever requirements you want. As to, for example, somebody asked about the GST exemption. It cannot be covered under one segment, right? We have a limited time of 1 hour. We cannot cover it there. So for these, you can request Monisha. We can share you the list, the entire list.
Okay, are there any other questions?
I'm not able to find any more questions.
Yeah. Any more questions from anyone? If not, so we can end the session. Is there any questions? Okay, I guess no. Okay, let's give Ms. Deepika a round of applause. Thank you for that insightful presentation and the session, Deepika. It was a wonderful and it was a knowledgeable session. So this is your chance to lay a strong foundation for your startups, all the audience. So we encourage you to utilize the knowledge gained in today's session and from the upcoming sessions during this series of Startup CA series. And thank you once again, Deepika, and all the audience here. And I would like to express our gratitude to Shine Foundation and the Institute of Chartered Accountants of India for their collaboration and support as being always like this is the third session going on and we are yet to come up with 9 sessions in the future. As you all know that we are conducting one session every month, so it will be useful and we can make the event reach more people and more startups. So and additionally, I want to also thank all the startups, our strategic partner KDEM and our ecosystem partners Inunity, Emirais Foundation will grow, Siddhaganga Technology Incubator, GINSERV, Manipal University Technological Business Incubator, EIC Nitte Incubation Center, and Derby Foundation. So their commitment to fostering innovation and giving us the startups for all the webinars and making this Startup CA Conclave series a success. Last but not the least, I would also thank all the guests and all the startups who will be joining for all the sessions. And before we conclude, as I mentioned before, so I would like to remind you all about the Karnataka Acceleration Network. You can also share the same details with all your network and other startups whom you know. And I'll be sharing the feedback form in the chat box now and also through the mail. Please fill the feedback form where you can also drop a answer that what are the questions you have for the speaker and for whom like we can conduct for the future sessions, in which topics we can conduct for the future sessions. And yeah, so we hope I hope you all enjoyed the session and it was knowledgeable and you got all the knowledge, like you cleared all the doubts which you had previously while registering. So let's meet up in the next webinar soon. That is session 4. So this is Monisha signing off for today. Thank you all. Have a great evening. Thank you,
Thank you
Deepika.
so
Once
much.
again.
Thank you, everyone.
Thank you, everyone.